Trader Zero on Twitter X has invited me to post analysis for Investor Ignite, a new venture for retail investors. The asset is up more than 14% on the week, and data suggests a continuation to the upside. Let's look into the details here because there may be a small opportunity to get long. Welcome back to the channel on this Hump Day Wednesday. This is ARCa, and let's dive into ticker symbol AZ. What is up, you guys, and welcome back to the channel. This is ARCa. Let's go ahead and dive into ticker symbol AZ. And what you are looking at here is the daily chart. And I would actually like to point out here two very bullish formations, right? One of which is a larger scale descending broadening wedge, which has already actually practiced its three tests of the golden rule of three, right? So we have test number 1 here of the resistance, test 2. This would be your test number 3 here. And it actually failed and now reclaimed the inside, followed by an actual test of true break number 4, right? So there is a shot here of a continuation to the upside, and it appears as though it already got enough validation of the support right down here, right? So now I know that you're going to notice here that you have a 12-hour formation, right? So that is specifically for the following, right? Before we get there, though, the traditional rules for this formation, right? Yeah, you get those 3 tests followed by the breakout on test number 4 or 5 as true breakout tests. And then your take profit, of course, is going to zigzag around. We're talking about a daily chart here, right? Your take profit per the playbook rules is actually located right up here at $4. And it appears to be $4.36. So I can go ahead and just adjust that ever so slightly. Yeah, it's right over here. Not a problem. Okay, so now let's go ahead and dive into this formation right down here. Okay, so let's go ahead and pull that up on the 12-hour time frame, and then you could see what I'm observing here. So let's now zoom in and take a look here. Okay, so this is now a smaller scale in the 12-hour chart, of course, still, right? It's a smaller scale, right-angled descending broadening wedge. Okay, so now what the take profit for this is not done like the take profit on the larger wedge, is actually done in a different manner, right? So you would actually have to take a trend line from the supposed area of breakout, right? Let's just say that it were to be somewhere here. Let's just say that it was this Friday, right? That this the asset ended up breaking out from here, right? So we would take a trend line from the bottom side of the formation to the top side, and then we apply it to that supposed area of breakout. And then the top side target that we're getting here is actually $2.69, right, to the very top side right over here, which is very confluent to the range high here at 265. So naturally we have a resistance range, right? So let's go ahead and take that down here temporarily so that we can actually have that rhyme with our take profit target. Okay, so of course it's not going to be one shot all the way to the top, although anything is possible in the markets. I really highly doubt that. But I believe that this is getting ready for that break. So now we have test number 1, 2, 3. Usually test number 3 follows a big capitulation, and then you start to get this natural reaccumulation here, right? So it appears as though the price action is headed towards that upside and potential breakout soon. Okay, so now that we know this and we know the take profit target from the smaller scale, we can go ahead and move on to the next chart, right? So let's go ahead and do that now. Okay, so very important to notice here as the, after this drop here that the asset faced from, let's see, Friday, August 18th to, actually the very lows that were printed down here at, on October 13th, you can clearly see that we have been riding or using the SMA 50 blue line or the teal line and the EMA 21 as a guide. Actually, you know what? Let me make sure that that's not my EMA 9. No, yep, it's my EMA 21. Yeah, the EMA 21 has been used as that guide towards the downside, and the SMA 50 as well. So if we zoom into the price action here, you will notice that price action has now wow, yeah, we have 4 consecutive closes of 8-hour candle iterations above both the SMA 50 and the EMA 21. We are in the process of converting these two moving averages into support. Now, the topside target here is at the SMA 100 8-hour is 180. That should present a temporary resistance. Right now, the SMA 200 is starting to rhyme a little bit more with the targets that we're looking for. Right, this is going to be $2.02 at the SMA 200 8-hour time frame. So I am suggesting, yes, that we are on our way up, but for the immediate short term, there may be an opportunity to get long this asset. Okay, so I will dive into that possibility. Let's see. You know what? I'm actually going to talk about the statistics first. So this is a backtest of volatility versus momentum, stochastic momentum, that is, on the daily time frame. And what I did here was actually backtest only up to where the asset, I guess, was probably relisted or something. I'm not sure what happened here, but the asset has more history than just this point here, right, where it says this is the very beginning. So I started backtesting from this area here, right, throughout that entire trading history, which was back to let's see, yeah, that was June 2020. So we have about almost a little over 3.5 years of data collected here. So, and I actually just collected this today. I ran the back test. So what the back test consists of is anytime that volatility has reached critical contraction zones down here within the 15 percentile and has started an expansion phase, particularly favoring the moving average and the volatility component, which is the spectrum line, paired with an upside pivot of stochastic momentum, right? This has given us, well, these are all the samples right here. This has given us this data set here. So 15 total iterations throughout the entire trading history on the daily time frame, 10 of which have been guessed correctly to the upside. That gives us an average upside accuracy of 66.67% with an average upside thrust of 39.249% over the span of about 18 and a half days, just over it, right? So let's go ahead and take a look at when I'm not done with the data here, right? So I'm just going to go ahead and go over when the signal fired, okay? Because it's a critical thing for us to observe. Now, if you take a look at here, the moment that we broke out of the channel, which would be this point here, the volatility component was not facing the upside. So that is an invalidation there. So we would actually have to wait until both of the volatility component and the moving average, represented by the white line, are pivoted towards the upside. And that just so happens to be today. So the signal fired at the opening of the candle from today. Okay, team? So let's go ahead and jot down what that possibility is going to be, at least favoring the average upside thrust, aka your mean. Okay, so this is going to give us the potentials of an upside target from the firing of the signal here. I want you to know that only because this is suggesting an upside, it does not mean that we can't face a downside first. Notice, for example, on this iteration here, the firing of the signal was at the opening of this red candle here, and the closing of the signal was the point that we reached the highest valuation from the point that we started, expanding outside of the critical contraction zone. So you can see here that we went downwards, right? And then we went down even lower. And then we eventually reached a new high that marked off in this iteration 28 days of time with a 20.08% gain, right? So despite what the price action does, we are measuring data. So it does not matter that this went down first. What matters is that it created the upside based on the firing of a certain condition or a criteria. Okay, so now from the firing of this candle, let's go ahead and add 39.25% to the upside so that we can gauge where the possibilities can be. So the opening of this candle here is located at, let me just go ahead and have the clear visibility here of the OHLC, right? The open, high, low, close data right there. Okay, so let's hover over that, and the opening is 165. So I would do the opening, the opening of the candle to the range high. That's how I measured the criteria. So let's go ahead and point it out here and then add to the price action 39.25%, right? So looking at it right about here, 39.25%. 2.5, right? Let's drop 2.7. It's 2.7 is fine. Okay, so price action is leading to a top side of about $2.30. Now, if we're kind of coming back to this here, it already shows that we have a top side based on a psychological target from this formation of 269. So putting that target down there could be another focus for us. So $2.30. Let's go ahead and kind of put it down here, right? So and we'll also consider it being some type of a range as it usually would be, right? So I can already see it. So $2.32 with a focus here on top for the range high. Let me see which one rhymes the most, though. Okay, so I think, let's see. Yeah, I would, in a very discretionary manner, of course, I would add 232 to 239. And we have the top side resistance here of about 265 to 269. Now we have two resistance zones on our way to towards that upside, right? So let's go ahead and come back to the data here and now apply the following. So I did calculate here the standard deviation. So the standard deviation is giving us a realistic move of 16.07% to the upside. So let's go ahead and apply that now, because it would be to our benefit to actually do that, right? So let's go ahead and put that right there and lead an upside target of about, what was it again? 16.07. Okay, so let's go ahead and put that right over here. 16.08 is okay. The target is 192. And we already have a target of 177 based on the resistance of this. Okay, now notice that the top side of this candle here is about 190. Okay, so nice. We're getting now a resistance top here, so we get to draw it in there as well. Okay, so that's going to be the top side of about 177 based on our discretionary resistance from this right-angled descending broadening wedge to the top side of the statistical value standard deviation of 192. Here you go. So that is now probably what's going to end up happening in the following days, right? We may be able to get a pump to the upside, get that 192 resistance, come back down, validate our 177 as an area of support. And then upon that confirmation, probably in 4 to 8 hour candle closure would probably do it. We would then move onwards and upwards to start realizing some of the higher targets that we have available to us. Right, so now coming back to the data, I have also calculated from the standard deviation and from the mean, the upper bounds and lower bounds of the first, second, third, and fourth standard deviations too. And now if you are familiar with statistics and the bell curve, right, so this is essentially what you're looking at here. So you're looking at the distribution chart right here, right? 68% of the results are with a 16.07% of the standard deviation land. This 68%, right? Then you have your they're noted here, right? Your first standard deviation, second, third, and fourth standard deviation, and you can see that the distribution ends up being lower probabilities as it goes towards the upside. Doesn't mean it's impossible. It just means it's a lower probability. Okay, so we have targets leading all the way. From the upper bound of the first standard deviation of 55.31% with a minimum 23.179%. Right, so lots of data to kind of keep in mind here, right? So let's just go ahead and put it down real fast. This is going to be your 23% lower bound of the first standard deviation at 23.18, right? So let's see if we can get as close as we could. 23.15 is okay, leading to 203. Let's go ahead and now jot down your upper bound of the first standard deviation, which would be a 55% or 55.319% to the upside, right? So let's go ahead and take that into consideration as well. And let's see. I think that should be okay. 51.38 leading to $2.50. That's sounding really familiar. $2.50. We have 269 at the top side here. And then let's see, 71% of the upper bound of the third or second, right? So I don't think we're going to have to draw all of these. I just want to show you how the distribution chart works and how probabilities and statistics play for the price action of the underlying, right? So now let's go ahead and apply that there. So 71.389, that's going to be, let's do it to, yeah, that's about it right there. $2.83. it's now showing us that we can have a range with a focus of 269, right? So that's going to be 250 to 283. Let's draw that in. 250 to 283, right? So let's get that in there. 250 to 383 or 283. So right about here to 283. And this typically happens. I'm going to show you what I mean. Okay. This is let me just go ahead and make that drawing here. This is how I hone in on targets, right? So in order for us to gain a higher probability of a resistance level, right? So we want to make sure that we can focus that area there. So you know what? I'm going to go ahead and put down the targets here for your convenience as well, right? So this is what it's looking like at the upper bound of the third to the lower bound of the third standard deviation as well. And we do have these smaller targets to kind of focus in on too, right? So let's just go ahead and jot those down and put them here for the record, as we will be observing this as the price action leads towards that upside, right? So you have a total range here of 250 to 283 with a focus of around 265 to 269. And that just happens to be the 50% of the returns from the range and the psychological take profit from this right angle descending broadening wedge. See what I mean? So this has nothing to do with pumping. It has nothing to do with a terrible narrative. This has everything to do with mathematics, right, team? So, and of course, now I want you to go ahead and make sure to give Trader Zero a follow here. And this is exactly where he posted it. This is him saying AZ huge contract, and now he put a so custom.com secures exclusive contract with Care4, the fifth largest retailer worldwide. And this is what he put up here. So make sure to give him a follow. Make sure to follow it just like this. It's _Trader0_ in order for you to get your hands on his analysis too, as he is the creator of Investor Ignite. And this is the first release for it, right? And I've been humbly asked to do this analysis, and I'm very happy to do such, right? So, of course, team, we can go ahead and continue the analysis here and put down the targets for the upper bound of the third and the fourth, but it goes without saying. We just have to observe price action here first in the, I guess, the first target that we need to look at here would be the, I guess we have actually, you know what? We have a 66.67% chance of hitting either of these targets right here, right? So we're going to have to just go ahead and practice some discretion here. So the first target being 192, being the 68% of the results of the standard deviation, and then it would be the average upside thrust, aka your mean, at 39.250% to the upside, which would lead to around $2.30. Now, I'm not saying that we're going to go there immediately. I am saying, and I'm going to remind you that I am talking about a potential pullback first, before we continue on to the upside. And there are a few reasons that would suggest such an atrocity, right? So first of all, let's go ahead and pay attention here to the 15-minute time frame RSI. You can clearly see it's on a nosedive here, but I would like to point out to you the potentials of bouncing from this SMA 14 down here, which is located in the gravitational zone of the bear weakness percentile. So please remember, bottom 50% is your bearish control zone. Your top 50% is your bullish control zone. Now, the inner workings are the weakness percentile, bull weakness, bear weakness, and of course, the outer workings are your strength percentile, bull strength and bear strength percentile. Every single junction you have on the RSI, 2% up or 2% down, are your gravitational zones. So in this case, the RSI is pivoted to the RSI signal, represented by the blue line, is pivoted towards the downside and currently sitting at 51.46%. It's well within that gravitational zone and highly likely to get pulled down here. Now, please notice here that the SMA 14 is just shy of the opposing side's gravitational zone, which would be, in essence, two support levels. So the gravitational zone support and the SMA 14 represented by the pink line as a support for a bounce to the upside. Not to mention the fact that we've been riding under this SMA 14 for quite some time. Until now, we broke upside of it, and it looks like we're coming back to validate or confirm that support before a continuation to the upside. It would honestly be okay to do this since the stochastic momentum EMA3 and SMA 14 are critically overbought, And, they could take a little bit of a break here and continue. What I am liking here is that we have current expansion as early as the 15-minute time frame. So we're getting more shares traded as we go. Sorry that this is long. This is a long movie, but it's absolutely necessary for us to observe. Okay, now please take a look at this. We're getting some negative cash flow, right? So there is outbound cash happening with stochastic momentum to the downside. So this is the stochastic momentum indicator versus money flow index. And we're getting the first red bars here on the 15-minute time frame, clearly showing that we could be facing a downside soon enough. So if we look at the, let me look at this on the daily time frame. So the average true range on a daily time frame is around 19 cents. So if we, if we're at, well, I guess we can do this on 12-hour, right? Because we have 161. So if we open at 161, first of all, I need you to notice that we're right at the resistance of the linear regression channel, and this is likely to move to the downside, right? So let's just say 151, right? So that means 142. That means that we could be facing a drop to the area of 142, and guess where 142 is? The bottom side support of the mean band here of the linear regression channel. Perfectly to the downside, right, just like the way the average true range is telling us, right? So let's go ahead and take a look at this as a target, right? So 140, yeah, I'd say 142 would be the zone, and it would be very, very conditional. So if we can get a closure of this of a 12-hour, honestly, at 142, then that would be enough condition for us to run to the upside. Okay. So, sorry, team, that's just my dog going insane below me. Okay. All right. Okay, I'm sorry, guys. I just got a little distracted. This guy's going ridiculous. All right, team. So, yeah, I do think that we have a potential here. So I'm going to just go ahead and draw the loading zone down here between 147 and a space of about 142, which could be the bottom side of the linear regression channel, right? So let's go ahead and put those targets right in here, just like that, and just like that for our loading zone. And please remember that the top sides are definitely something to observe. Now, upon getting this support, yes, we're going to get an upside here, but then we would have to combat the mid band here of the linear regression channel again. So 161 would be incredibly important to break and close outside of in order for us to continue on to the upside to potentially test the zone of about 180. Okay, so now you have all of the targets. And by the way, 180 would be right here at the resistance of this of the right-angled broadening wedge, right? And 142 just so happens to be right down here, the support of the larger time frame descending broadening wedge, right? So you can just see how mathematics and statistics are playing along with psychology as well, right? So yeah, and now you know the target. Sorry it did take so long. It's a huge movie, but I hope that it does benefit you. If you have any questions or concerns, definitely go ahead and get in touch with me. And now for the people who actually are serious about trading, I will announce it to you that there are only about 4 or 5 seats. I have to make an official count left for the ArcMasters trading course and 16-week mentorship, right? So please go ahead and get in touch with me, and I shall get you enrolled. I'll pass you the disclaimer, the syllabus, and all the pertinent information for this mentorship program, right? So please go ahead and jot this down I think I offered this maybe 3 weeks ago, and it's already almost 95% completed, and the course should be starting, I believe, the first or second week of November, and it should be on a Saturday around 9 to 10 a.m. Pacific time. Okay, team, so this is it right here. Thank you so much for watching, team. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. I need you to do your own due diligence, and everything will be cool. But with that said, team, I wish you well. A very, very good rest of your night, and I shall catch you at the bell mañana. Adios.